Hi, my name's Tim Archbould and today I'm going to talk to you about current regulatory policy regarding operational resilience for financial services firms and key requirements that all financial services firms need to consider in a multi-cloud world. On the 29th of March 2021, the FCA, in collaboration with the PRA and the Bank of England, released its policy statement on operational resilience. The paper is called PS21/3, Building Operational Resilience. The statement was a follow-on publication that had seen several consultations and discussion papers issued, stretching as far back as July 2018. And as a result, financial services firms must now turn their attentions to identifying their critical business services and understanding how best they can continue to service their customers whilst coping with future unplanned disruptions to their business. The policy document, which you can find on the FCA website, is quite a long document, hence I thought I would summarise the key points that organisations need to be aware of as they embark on complying with the policies that have been issued. It's clear with the FCA's policy statement that their intention is to switch a firm's focus to ensure that they can maintain important customer-facing business services as opposed to the current focus on a firm's ability to survive a significant outage or event. There are a lot of new rules for organisations to demonstrate compliance with, and in today's environment of multi-cloud architectures, there's a greater level of scrutiny being placed on third, fourth and even fifth party suppliers by the regulator. The policy statement has several key milestones which firms need to meet in order to implement their responses to the new rules. We can see that by the 31st of March 2022, firms must have identified their important business services, set impact tolerances for the maximum tolerable disruption and carried out initial mapping and testing. Firms must also have identified any vulnerabilities in their operational resilience. Then, as soon as possible after the 31st of March 2022 and no later than the 31st of March 2025, firms must have performed mapping and testing so that they are able to remain within impact tolerances for each important business service. Firms must also have made the necessary investments to enable them to operate consistently within their impact tolerances. Now, when you consider that many firms will have hundreds of business services across multiple channels and products, achieving compliance to these new regulations is likely to require significant resources and effort to complete within the stated time periods. Firms must, if they have not already done so, begin to map their important business services. The FCA defines important business services as those, in quotes, if disrupted could potentially cause intolerable harm to the consumers or the firm's services, or a risk to market integrity. So upon identifying their important business services, firms must then set impact tolerances, using time and duration as mandatory metrics when measuring impact tolerances. The impact tolerances that are set should also specify that an important business service should not be disrupted beyond a certain period or point in time. And this will mean it is therefore essential that firms understand, at the very least, SLAs, SLOs and other service level metrics across their internal teams, third and fourth party suppliers and the relevant handoffs between each party. A great deal of emphasis is also being placed on firms understanding their supply chain dependencies, and this is a consequence of the growing adoption of public cloud across financial markets and more broadly an increasing dependency on outsourced managed services. The FCA mandates for firms to understand their wider supply chain handoffs, pointing out that ultimately, if a third-party provider supplying an important business service to a firm fails to remain within impact tolerances, that failure is the responsibility of the firm, not the third party. And so for organisations that realise that the future of digital services belongs to the cloud, but want to remain in line with key regulator guidelines as discussed, this can only mean one thing: an acceleration of their hybrid multi-cloud strategy. As such, they will have to take steps to both ensure resiliency and avoid supplier lock-in by introducing different arrangements such as hybrid and using more than one cloud service provider in a multi-cloud strategy. But what do the regulations mean for multi-cloud? The guidance given by the FCA is trying to do one thing: reduce risk. And this can be approached from four main disciplines: operational risk, concentration risk, data and security risk, and exit risk. And today I'd like to focus on data and security risk. So how do you reduce data and security risk, which are critical when it comes to reducing overall risk? A high-level plan needs to be created which For one, conducts a wide-reaching security data risk assessment, understands data sensitivities, and knows how to remove data. Firms should carry out a security risk assessment that includes the service provider and the technology assets administered by the firm, to consider data sensitivity and how the data is transmitted, stored and encrypted where necessary. And firms are also need to have a plan on how they would remove data from the service provider's systems on exit. In my experience, while service providers are great at helping you to get your data into their cloud, they're not so helpful when it comes to getting your data out. Regarding data, it's important to build a view of data tiering and sensitivity of data you're prepared to push into the cloud. And this entails knowing what data you have, where it comes from, what it is, who has access, what it's for, and how frequently it's used. You must understand the criticality of the data. For example, does it support mission critical services? And knowing what data is critical and what is relatively unimportant means you can create a triage data migration strategy. Finally, ensure there's a contract in place with your providers that states that they commit to helping you get your data out when the time comes. A further critical part of the cloud journey is ensuring the enterprise stays secure across its data and workloads throughout its digital transformation. If this is not thoroughly considered, there's a danger of fragmented security solutions being deployed, given the growing list of security tools managed by the firm, as well as native controls available from the cloud service providers. So security teams must now also adapt to a shared responsibility model with their CSPs, depending on type of native cloud security capabilities that are available. This change in responsibility for the firm further adds to today's challenges in establishing visibility and control access across fragmented environments. Securing a hybrid multi-cloud environment requires a different approach than previous security frameworks that solely considered on-premise environments, and firms need to establish a secure cloud strategy and roadmap using a coordinated DevSecOps approach to enable continuous management of cloud threats and ensure cloud resiliency. Here at Celerity, we have the experience and expertise to help financial services firms create a holistic data and security strategy. We can assess your current state of cloud readiness, offer greater visibility of potential security incidents, and help you define your ideal cloud data and security future state. This will all be based on your business and regulatory requirements, creating a roadmap to a secure, hybrid, multi-cloud for you to execute.